Good morning, my name is Christelle from Klerk, Independent Technical Analysts. The first one on our list is listed in the US and it's called Applied Materials. And we can see that the share has had a beautiful rally at the top, very important. There was a beautiful technical goodbye kiss in the week of the 23rd of October as well as the 30th of October, where the share pulled back, tested the 40-week moving average and kept it as support, and that is seen as very, very positive. And ever since then the share just continued to rally for higher levels. Now for the last 4 or 5 weeks the share has stopped making new highs, and that's usually an indication that the share has started to lose some steam, loss of momentum, and that the buying power has started to dry up. Now, technically, our stochastic is in overbought territory. It's sitting on a 90, which means that elastic band is very stretched. However, both lines within my stochastic indicator is still pointing upwards, implying that the momentum to the top is still in place. Only when that blue line, the percentage K line, starts to lose momentum and starts to break downwards through the orange line will I refer to it as a negative divergence, and that increases the probability of a downside. However, in my candles, I can see last week's candle is a typical spinning candle. Both shadows on the upper side and the lower side from the real body is almost the same in length. A doji type of candle, which shows indecision. It tells me they're not sure. The buyers and sellers were not sure whether they wanted to take this share higher or that they wanted to start to take profit. So technically our first sign of weakness on Applied Materials will be below $197.30 and above the high of the week of the 4th of March, $214.46. Above that level, we can assume then again that the momentum to the top can continue. Risky to take shorts at this moment with the momentum to the top clearly in place in the US, but those are the technical levels you can use, Roger, to decide, listen, am I going to accumulate more, which will be very risky with that overbought stochastic, or am I going to start to take profits as the share confirms the weakness to the bottom? Caterpillar, also listed in the US New York Stock Exchange, ticker CAT, and we can see, continue to make new records highs, which is interesting. On my stochastic on Caterpillar, I already have a negative divergence on my stochastic, but my candles, the price action, continue to confirm that the momentum to the top is still in place. We had a harami candle last week, a little bit of a bearish harami candle, but not enough to say, listen, that the sellers are keen to take profit yet. Every week before that, the share just continued to rally to higher levels, and if we look back, we can see that they're definitely at a record high going back to 2018. So at the moment, risky to continue to accumulate. So technically, let's just see if this is a window. The high in the week of the 11th of March was $347.29, and the low is $347.86. So there is a small window between the week of the 11th of March and the week of the 18th of March. So a window is a gap on a candle graph, and we assume that the momentum to the top will continue as long as that gap remains open. Now a gap, the rules around gaps are they also always have to close, especially on a weekly graph, which is the ones we're looking at the moment. There a gap weighs very heavy because it becomes a target for either buyers or sellers. So at the moment, because the gap is at the bottom, at some stage the selling pressure will have to come back and close that window. Whether it takes a week, a month, a year, or a decade, at some stage the share has to trade between those two levels in order to close that gap. But the gap also remains as a strong support, which assumes that as long as that gap remains open, we can say the momentum to the top will in place. So our first sign of weakness will only be below that window, that gap, and that is below $347.29. Below that level, we can say that the first sign of weakness on Caterpillar is visible. and above $367.22, we can assume again that the momentum to the top can continue. Icon, listed on the ticker on our exchange, the company is called Icon. The ticker on their exchange is called ICLR, listed on NASDAQ. Now we can see for the last 5 weeks, the share has stopped making new highs. Obviously, my stochastic is extremely overbought. I do have a negative divergence, which implies that the probability for a pullback and that the sellers are going to start to take profit is more likely. Now, we can see that the candles just hovered sideways and that the tails on both sides of the real body is fairly the same in length. And that implies indecision. It tells us that the buyers and sellers are not sure who's the strongest party here. So the first sign of weakness on Icon will be below $324.80, but above that high in the week of the 4th of March, above $344.77, we can assume again that the momentum to the top will continue. So clear resistance and support levels that has to be overcome, but for the last 5 weeks, the share could not attract enough buyers to lift this share price to higher levels. Netcare, listed on our local exchange, ticker NTC. And we can see, clearly oversold. Now I've got a positive divergence, right? My blue line has broken upwards through my orange line. And has it been confirmed in the candles yet? Well, last week's candle in the week of the 25th of March might be the turnaround candle that we've been waiting for. The big test now for Netcare is, can that bottom support waiting at 11 Rand 49 remain in place? So as long as 11.49 remains a support, we can expect higher levels on Netcare. I would say the first sign of strength on Netcare will be visible above 12 Rand and 10 cents, and that is the level of resistance that has to change into a support, and that is the level that has to confirm to me that there's enough buyers to lift this share price to higher levels. My strong resistance is the 40-week moving average waiting at 13 Rand 37, and above that level the long-term sentiment towards the share will change to positive. Below 11.49, more downside, and first sign of strength above 12.10 on Netcare should you be interested to make use of the oversold situation of that share. And remember, we prefer to buy a share when it's oversold, no matter what indicator you use, because that means there's a lot of room for upside, and the probability for more upside is there. There's a lot of room before that elastic band becomes stretched to the side. Woolies, ticker on our exchange WHL, and we can see that the momentum to the bottom is clearly in place. Do not try to catch a falling knife. That strong support on Woolies is waiting, and if I go back to the low of that week of the 29th of May 2023, and that is waiting at 58 Rand 24. That is a critical level for Woolworths that has to remain a support. So the share can test that level, maybe even whipsaw or false break it a little bit, but they need to rise again above that support level, because if that level, as I've given it through there at 58.24, if that level starts to change into a resistance, unfortunately an ugly double top formation will be confirmed. And a double top, triple top, and head and shoulder formations are all warning formations to say, listen, the top of this share might be in place and we can see this share a lot lower. So hopefully this oversold situation, look at that, my stochastic is sitting in a 5 on a 5. I do not have a positive divergence yet. My blue line has not broken upwards through my orange line yet. But when that happens, it will be confirmation to say, listen, there might be some upside now taking place. Also confirming it on a candle. But what I want to say is that hopefully the oversold situation will attract some buyers to keep that 58.24 level as support, because if that level changes into a resistance, it will be seen as very negative for Woolworths. Also, bear in mind, ladies and gentlemen, that 40-week moving average has also already changed into a resistance, and that is waiting at 69 Rand 41. That already tells me in itself that the long-term sentiment towards Woolworths at the moment is negative. So the long-term buying power is already negative around Woolworths, and should that double top be confirmed, I mean, we can see some ugly things here at Woolworths. First sign of strength, let me just confirm that, will be above 60 Rand 80, and that week of the 18th of March above 62.45. I would say we can take a sigh of relief. But technically, as the textbooks say, this double top formation will only be wiped off. The warning around that formation will only be wiped off the table once the share starts to consolidate above the highest part of either the left loop or the right one. And in this case, it will be 81.13. So only above 81 Rand and 13 cents will that possible double top be off the table. Remgro. Ticker on our exchange, REM. Also very oversold at the moment, sitting on a 7 on a stochastic. I don't have a positive divergence yet, but ladies and gentlemen, this can be a possible morning star formation, a positive formation that can tell me the night is behind the candle and the new dawn is breaking. Morning star pattern is a 3-candle pattern. It's a bearish candle followed by a doji type of candle, followed by a bullish type of candle. Now this candle will only be finished by Friday's close, so you have to keep this graph on your radar. But if this last candle that is in the making is a bullish type of candle, in other words, it needs to enlarge or cover more than 60% of the preceding candle, or start to trade above 124.82. If that happens, and by Friday's closing price, this can be a Morningstar formation, which the textbooks say on the Monday, the following Monday, the share will be a buy. Being an oversold with a Morningstar pattern, we can assume that this might be the turnaround that we've been waiting for Remgro. What is the strong support level on Remgro that has to remain in place? That is 117 Rand 25. Below that level, we can assume downside again. Let's also take a look here at this double top formation. If we go back to history, this double top formation now played out completely on Remgro. A warning formation when that first 40-week moving average changed into a resistance. That was the first warning, and then obviously that double top took the share a lot lower to below 120 Rand a share. So let's hope that this Morningstar formation can be the turnaround that we've been waiting for Remgro. South32. A lot of the commodities is starting to look a lot better. An oversold territory. Look at that. Positive divergence sitting on a 19. My blue line has broken upwards through my orange line. Now the strong support on South32 that has to remain in place is waiting there at 35 Rand 50. Below 35 Rand 50, we can expect more downside, but the first sign of strength will be above the high of the week of the 18th of March, and that is waiting at 39 Rand. So above 39 Rand, we can say, listen, we're starting to attract more buyers at higher levels. We can see the share maybe going back to the 40-week moving average, that red line waiting at 40 Rand 77. Also take note, the 40-week moving average represented by that red line is a critical level. Why? Because in the week of the 8th of January as well as the 15th of Jan, the share tested the 40-week moving average twice. It could not change it into support. It kept it a resistance, and that was seen as a negative technical goodbye case, which is very negative. And that was the hint to say, listen, we can see some more downside on South32, and yes, we did. So above above 39 Rand, more some strength, but below 35.50, the warning on South32 we might see more downside, and the warning on South32 will continue. Don't forget to send through your request via email to admin@francedeclerc.com or on Twitter. Have a fantastic week. Take care.